All right, let's talk about the mystery charts and the methodology in action. When I was literally like a minute ago, and I was getting ready for this webinar or getting ready to start, I got to thinking, it's like, boy, the methodology in action, that's kind of a boring thing. And then I got to thinking about it. Everything I do is with you in mind, and I'm kind of preaching and teaching to a former self, maybe 25 years ago. And these are the things that I wish somebody would have showed me. Nobody showed me. A lot of people showed setups, but nobody said, "Hey, this is how you do it. Let me show you. Here's an actual trade that was actually done. Here's where we got in. Here's where we took profits. Hey, you know what? This one didn't work, but sometimes they don't work. Quite often they don't work, and so on and so forth. Outliers are key, and sometimes you have to sit on your hands a lot. And these are the things that you need to know. And trading isn't always exciting, and a lot of times it is boring. So anyway, hopefully that's a good enough excuse for the lame presentation I presented here. But anyway, we got a mystery chart reveal this week. This is math. This was recommended a couple of weeks ago. Nice uptrend, and you can see lots and lots of Landry light, meaning the lows are greater than the moving average. I use the 30 EMA for my Landry light mostly. With the TFM 10% system, I'm using a 50 simple moving average, and that's on a 50-week basis. But for most of my trading, I really like the 30 EMA. It's really become one of my favorite moving averages. Anyway, nice uptrend, and you also had a bit of an acceleration happening. And on top of that, you had persistency. And as I said quite often, or as I've said quite often, this persistency is just a market's ability to go up day after day after day. And mathematically, it's equivalent to linear regression. I just like to draw a line through as many bars as possible. You can see it pulls back to the moving average. Landry light, which is simply a count of how many days the lows are greater than the moving average, or for downtrends, the highs, as you can see back here, are less than the moving average. The Landry light was pretty high, 30 something, and then it goes down to 0 when you intersect the moving average. And the Landry light pullback is a great little pattern. As I've been saying quite a bit lately, and I just haven't gotten around to it, but I think that at some point I need to do the Landry light pullback or the one pattern challenge, and I think that the Landry light pullback would be that one pattern. And what amazes me is a while back we had a string of winners, and they were all Landry light pullbacks. There were other things like TKOs and other stuff. And the mystery charts I'm going to show you this week are, I think, almost all Landry light pullbacks. One is like a hair off, but there are also other things too. But anyway, I think it's a great pattern. And if I was limited to ever just trading one pattern, that would be it. And that's the kind of thing you need to know. Like I said a second ago, I was like, well, all you need is one pattern to be successful. I'm like, okay, fine. What pattern? I'm like, all right, here's your pattern. Anyway, there's parameters down below: entry 360, protective stop of 260, and initial profit target of 460. Now, this is a very volatile stock, so that's why the percentage-wise, at least, those parameters seem rather large. Entry was here, stop was here, and IPT up here. Now, let's take a look at what happened. Well, technically it triggered, but before it triggered, I actually pulled the setup, okay? Now, what happens is sometimes when you're looking, usually I'm in for a penny, in for a pound, and usually if I recommend something, I'll stick with it until it either triggers or just absolutely implodes or whatever without triggering. No capital gets put in harm's way. In this case, this one was a little bit on the iffy side, was a little on the thin side, and it got thinner and thinner as time went on. So I decided to go ahead and pull it. So it might work still, but I decided to pull the setup. Okay, here's a new mystery chart for this week. And this is one I'm really excited about. I really hope it works, but I really like this setup a lot. Anyway, you can see nice uptrend here. And then notice all of these lows. You've got 50 lows greater than that EMA. Again, that's the Landry light indicator. And notice you also had lots and lots of persistency and some acceleration too. So all these things, and we're going to circle back to this in a few minutes, but all these things are very important when you're, or as young folks now say, important. I don't know why they do that. But anyway, all these things are important when you're looking at a chart, making sure you're picking the best and leaving the rest. Anyway, it made a kind of a minor double top, and then it made a move, which I call a TKO, or in this case, a double top knockout. Notice also it was a Landry light pullback. The Landry light went from 50 because it's been up 50 days in a row. The lows have been greater than moving average for 50 days, I should say. And then it touches the moving average. Remember when Landry light, when the moving average, when the price, let me rewind that, when the price touches the moving average, either from underneath or above, the Landry light goes to zero. So you can see green back here, 0, -1, 0, and then -1, -2, -3, -4, -5, and so on and so forth. Now remember, it does not measure magnitude, because if you look right here, you can see the magnitude's increasing of this indicator, so to speak, but price is actually getting closer to the moving average. It's just a count, okay? So notice right here too, on the knockout bar, you can see price is almost the moving average, but the Landry light went up one more bar, like to 49 in this particular case. So always look at the charts, regardless of what indicator you're using. As I preach, I like to see indicators, with very few I use, as illustrators. In fact, the indicators that I've created were really more for you than for me, but in the process, I've learned a lot in the process, and I do enjoy using them as, again, illustrators, because sometimes you might have days and days above that moving average, lots and lots of Landry light, but the lows are greater than the moving average, but the market might be choppy and going sideways and losing steam. That moving average is kind of hugging underneath. So again, always look at the chart. Now let's zoom in on this. Let me show you this pattern here. This is what I call a double top knockout, and that's where you have a minor double top, usually a peak separated by 4 or 5 bars in between to qualify, and then you have this knockout move. So what happens in this particular case, and with everything I do, it's like I'm trying to explain, like at a gym, you know, people like, they're trying to always ask me about the news and the tariffs and all this other stuff, and I'm like, not that it doesn't matter, but you can't trade off of it, and often the market has an opposite reaction. And I try to explain to them that all I'm doing is looking at charts, and I'm trying to read the psychology of the players. And when you have a double top, you have your nervous Nellies who might be anxious to get out because the stock lost momentum, or in their head they think at least it's lost momentum. And then you got your eager shorts are going to jump in, and then TKO sucks in the shorts, and if the market begins to rally, it spits them right out. So everything has a psychological basis to it. The pullback, or the TKO type of pullback, is going to knock out players, knock out those nervous Nellies, and again, suck in some shorts. And when the market begins to make new highs again, what will happen is the shorts will have to cover. And the thing about the shorts is shorts are very egotistical as a general statement, and they'll likely cover down the road because they don't like admitting they're wrong. And sometimes that's why you get these parabolic moves out of something like a TKO. Shorts are also egotistical. I learned years ago when I was speaking at a conference full of day traders that they actually have a pattern where they're short the parabolics. If something goes parabolic, a short will actually get in there and try to catch that top, which is a very dangerous thing to do. Anyway, so nice little double top knockout type of move in this one, and there's your TKO right there. So DTKO, Landry light pullback. There's your parameters. Entry is here, stop is down here, and the IPT is up here. And what's it doing today? It's actually down a little bit, so no trigger just yet. But that is a beautiful looking setup, okay? And I'll circle back to that in one more second. All right, with a new mystery chart this week, this stock was in a somewhat gradual uptrend after bottoming out. Then it began to accelerate higher, lots and lots of Landry light down below. And also, bigger picture, it was a cup and handle, and it's also an IPO, and there's various patterns, bigger picture patterns that the IPOs go through. And one of them is the die and then fly. Sometimes IPOs get a little bit ahead of themselves. They come public and they just kind of dive, and then they bottom out for a while and then begin to take off. And those could actually be pretty good patterns. Bow ties, cup and handles, and just generic pullbacks off their all-time lows. in IPOs can work out really, really nicely, especially if you don't have a tremendous amount of overhead supply to deal with. Anyway, so again, Landry Light goes from a fairly high reading down to 0 when the price bar intersects the moving average. And the pullback, of course. There's a parameters, another fairly volatile stock with fairly liberal parameters. Stop is down here, and then IPT, initial profit target, is up here. So I'll follow up with that one in upcoming webinars. We'll see how it works. This was not a mystery chart because it's set up in between webinars. By the way, you can get all of these historical setups 2 places. If you want the newer ones, youtube.com/Dave Landry, and look for a playlist called Core Trading Service. And those are delayed anywhere from 1 day to maybe a week or so, depending on what setting got, what's triggered and what has it. And then the longer term archives, and they're updated usually monthly. I'm getting ready to update them again soon. DaveLandry.com/archives. And it's a good exercise, I'm gonna say so myself, in going through those things, because you're getting to see analysis in real time, okay? And then you get to see warts and all how it worked, good, bad, and indifferent. And again, this is something that nobody showed me early on. And I was like, geez, I wish somebody would show me this. And I have to credit Larry Connors at least partially for some of this, because early on, he would tell me, because I was all nervous about writing. I was never a writer. I used to drop a class in college if I had to write. And now writing is one of my favorite things. I wake up early and write. And Larry helped me early on, and he recommended some books. I think one was called Right to the Point, and I read about 3 chapters of it, and I kind of got the idea. Just don't try to be all grandiloquent. Just say what you're going to say. And the other thing he taught me, I do have a point, was to just talk to them, talk to the people, okay? And then I kind of took that ball and ran with it, or run with it, whatever. I never get the tense right on that one. Somebody can maybe explain that to me one day. But anyway, it's kind of like, okay, and then I turned it around to, okay, what do I want to hear? And so it's kind of like a Tim Ferriss, I think, calls it scratch your own itch. And that's where you're doing what you need to do, and it's what you need to do, and it's what you need to hear personally. And I think there's something there. I don't want to brag or whatever, but I think that's, nobody else that I know of is doing that. If somebody is, let me know, because maybe I can learn from them too. Anyway, nice uptrend. Kind of went around the block on that one. Nice uptrend remains intact. Also, once again, accelerated uptrend. I have a strategy called accelerated momentum strategy, where you're looking for kind of a market at a gradual trend working its way higher, then look for it to blast higher, and then you're looking to get in the first correction. In this case, almost a Landry Light pullback. It missed this moving average by a hair. I'm sure it's a 20 EMA Landry Light pullback. Anyway, you can see nice little pullback there. Here are your parameters. Entry was 580. Initial profit target 760 and a stop at 415. Again, this is also a very volatile stock. So stop is down here and the IPT is up here. We're profitable for 1 day, and we did bump that stop up a little bit, but it's not doing great just yet. In fact, we are negative so far in that position. And another thing I wish somebody would tell me, it's like, well, just because you enter a stock doesn't mean it's going to move in your favor, right? And the other thing is, have a plan in place, have a stop in place, and if you don't hit that stop, stick with it, okay? Don't look at the market and say, oh, this market's getting iffy, or the sector's getting iffy, or whatever. I mean, do all that analysis, but say, okay, well, I'll probably get stopped out of this trade. Let me just let the chips fall where they may. And every now and then, you might be pleasantly surprised and not get stopped out. And I have more to say on that in just 1 second. Anyway, here's a little follow-up on a previous mystery chart. This is TFPM. Now, with metals and mining, I tend to be a little bit more lenient and look for a little bit less perfection in the setups and other commodity related areas too, because commodities tend to be efficient and choppy, and that gets reflected and exacerbated actually in the underlying stocks. But anyway, this is a gold stock, and you can see it really began to take off. Again, there's that acceleration thing. Notice that the angle here is not that sharp, but decent, and then it begins really to take off. And then, of course, we have the pullback again to the moving average for a Landry pullback. We have nice green, and it goes down to 0 for the pullback. There are all the parameters down below based on a 100K account, risking 2% per trade, okay? And that's if stopped out. Entry was here, stop was here, initial profit target way up here. So you can see it triggered and then immediately came back in. Now, I'm not going to poll my clients, but I'd be willing to bet a lot of people gave up on this stock. So let's just count some days here. 1, 2, 3, 4, 5. That's 1 week. 6, 7, 8, 9, 10. That's 2 weeks, okay? And then if you want to even count further, 11, 12, 13, 14. So there was almost 3 weeks where this, after an initial little bit of gains, right? So I guess 2 weeks, 2 or 3 weeks of being underwater and losing money in this trade and certainly not making new highs. And that probably tempted a lot of people to get out. And as I often show the dead money report, so this hit the initial profit target. Let me just finish up the trade. And you can see that I was looking for 1,000. That was the first low. I got 900, better than a poke in the eye. The stop goes to break even when that happens, okay? Now, if we go back to it, you can see that this was it made a brand new high here, okay? So that's 1, 2, 3. So it's been a month before it has made brand new highs. So if you're looking at your equity, you've got a 1 month drawdown, meaning that you've lost money over the last month in this position. So what should you do? Well, nothing, okay? This seems like dead money, but you don't know if the position might work. It might just be catching its breath. Honor your stop. You get stopped out, so be it. Shout next. Now, barring overnight gaps, because we already took half of the profits off, stops at break even, and it might be a little bit higher than break even now. I have to check. But anyway, so worst case, again, barring overnight gaps, is you break even on the remainder, and at least you made a little bit. Annualized, that's a pretty big deal, making 1% on your account overall, $1,000 on a hypothetical, again, 100K account, although obviously I do take these trades, especially in my model account and other accounts too, but I like to at least have a trade to show you. Now, this is not a mystery chart. Again, it's set up in between webinars. I might even mention it like right after it triggered. So you can see, again, accelerated uptrend, double top type of knockout-ish move. There's a gap in there, but again, I'm a little bit more lenient on gaps in a commodity-related stock because commodities tend to gap around. So that didn't really bother me too much. Nice acceleration again, pull back to the moving average. You guessed it, Landry goes from a fairly high reading down to 0 when it intersects the moving average. That was a recommendation. And again, you can go to davelandry.com/archives and get these, or again, youtube.com/Dave Landry to get the newer ones if you want. Entry was here, stop is here, initial profit target up here. Let's see what happens. Pretty decent rally, but it just hasn't quite gotten to that initial profit target. Now, I do use discretion on trades, but it's like 40-something cents on a fairly lower price stock like this. So it hasn't quite gotten to that initial profit target of 16.50. I think it hit 16 and change, but not much more. So if it does sort of get closer to it, I probably will take profits a little bit early on that. And usually when I do that, I'll announce it in my Facebook group so everybody can see that I'm taking profits and I'm not front running or whatever you might call in that particular case. Now it did close nicely higher, so it was nicely profitable. So in that case, again, we will move that stop up even though the initial profit target isn't hit. We bump the stop daily if need be, okay? And then when the IPT is hit intraday, we bring the stop up, okay? And then we gradually let it loosen up over time in an attempt to capture a longer term trend. Okay, I'm gonna blow through this TFM 10% system pretty quick. There's tons of information, again, on my YouTube channel, which is right here. If you're interested, just don't operate heavy machinery after viewing. Stole that line from Greg Morris. Anyway, you can see for the buys, which is over here, and again, this is a weekly chart, you need 2 lows greater than the 50-week moving average, and you have to be within 10% of the 50-week closing high. And you can see I have these zones set up. This is less than 5%, this is more than 5%, and this is more than 10%. And right now, we're just off of all-time highs in the market, so we're right about that 0% number. These zones were inspired by one of my clients named Jeff. I don't know if he's here today. Yeah, I think he is. He likes to start thinking about getting out of a market on an index level when it's 5% or more away from that 50-week closing high, whereas this system is based on 10%. Now, he's going to get a little bit more whipsaw, but he's also going to get out the way a little quicker. Now, one thing just real quick. So the buy was here. I just want to show you this. And I talked about it in prior weeks, so I think it's important to reiterate. So that's your buy. Now, the only thing I didn't like, and it's something I didn't think about when I developed this system, and that's the thing, is you develop a system and it looks great on paper, but when you actually go to trade it, it's like, oh my goodness, it's not as easy to follow it as it is when you're following it with this hypothetical money. I don't want to digress too much, but there's somebody out there, like, they're showing how wonderful their system is, and it's a hypothetical system. So it's like, okay, well, trade it with real money and then see, and they're selling it to you, of course. Anyway, I prefer to buy on some strength. So you see the following 2 weeks, it did come back up. So you don't want to modify a system while you're in the midst of, in the heat of battle, so to speak. But this is one thing that through real time following it or monitoring it too, in one case, I've only taken one trade off of this, and luckily it was a big one. It was when the NASDAQ triggered in the Qs, and that was like a 65% trade. And I have not continued to trade it mechanically since, although I probably should have. But anyway, I prefer, again, to buy on strength, and you don't want to change your system. And kind of channeling Greg Morris, the worst time to change your system is during the heat of battle, right? Or question your rules. But that is one thing that I think should probably be tweaked. Instead of buying on weakness, you probably want to buy on strength, just like we do with the pullbacks and all the other patterns we trade. Okay, Landry 100, proof of concept, just real quick. It's like each week I learn a little bit more by doing this, and I'm going to try to keep doing it. I know if the market gets choppy or goes into an extended downtrend, it's going to be hard to kind of slug through it because there won't be a whole lot of stocks, but I'm going to try to keep up with this. And I think we're coming in on 1 year, a year and change on this. Anyway, so again, as I say each week, everything's bought a new high. So this one's up 316% so far, and it was bought right there on March 28th. Now, when I saw this one today, I'm like, wow, March 28th, wasn't the market doing badly back then or doing poorly? So you can see 300-something% move, knock on wood. Now this one has lost some steam, so it could come out fairly soon. Hopefully at a big gain. But anyway, getting back to when the stock triggered into the Landry 100, so to speak, or when I picked it, the market was in a lot of trouble, and that's the 28th right now. Now, no sane person would rush out and buy a stock during this period, but I'm just blindly following this buying new highs, okay, type of system, so I could see the momentum. Now, if you buy new highs, if a stock's going to go up 100% or 1,000% or 3,000%, like we had one RGC a while back in this list, it's going to have to make new highs first. So that's kind of the premise of the whole thing. And every now and then you catch one of these big outliers, which is key. And that's another one of the things that it kind of, the proof of concept that it reveals. But anyway, again, if a stock is going to go up 100% or 200% or 300%, it's going to make a new high first. So my goal, one of the goals I should say with this, is to be in the hottest stock, so to speak. And I'm experimenting with a lot of different things with it. I did a while back, and my timing was absolutely horrible, but I did start putting like $1,000 into each one of the stocks. And then that sort of failed miserably. But what's interesting is the few that I have left over are up 100, 200, 300% or more. So I think another lesson learned, don't expect the market to just behave like you want it to behave or how it has been behaving in the future, because things are going to change, obviously. But it also kind of woke me up to where, okay, if you were going to follow something, you're going to have to follow it for a long time. And as I tell people all the time, if you're trying to follow my stuff, 6 to 8 months at least before you catch a good momentum cycle. And I see it all the time. I saw it happen recently. And in fact, we did okay recently, not fantastic, but okay. And I had one guy was doing his due diligence and doing everything and all this other good stuff. And it's like, okay, this might be a good long-term client, and asking me tons of questions. Good, doing his homework. Okay, fantastic. And then he signs up for the service, and within a week he quits. Okay, now I don't know what happened, but I'm guessing, he wasn't ready for it, or he didn't, in spite of me saying it might take 6 to 8 months, 6 or 8 days, and he's out. So not sure. Anyway, getting back to momentum. Momentum is great when it works. Okay, it's like butter. But every now and then, and we had a debacle du jour. So this is no money management issue part. Dow, this one was up nearly 100%. Now, in this experiment that I did take profits at 100%, half off. Okay, so that way the position is paid for. So right now, I don't have any money management in here. I just wait till things get weak and take them out. Obviously, this one had to come out. But it was up 91% before it lost 83% of its value. And it turned out to be a pretty big loser in the Landry 100. But every now and then, you get one that goes up 1,000%. I think the RGC was taken out at 1,700%, but it was up 3,000. So it does end badly. And every now and then, you get creamed. Okay, so in a case like this, you can see it got creamed. And then part Dow, because the last webinar I did, we had one that very similar. By the way, this is a Chinese company. I do have some clients that told me they no longer trade Chinese companies. I haven't committed to that because I need to be a purist, right? This thing did go up 100%. So with proper money management, you could probably still trade these Chinese companies. JYD I got whacked on, which is probably a Chinese company, which is another one of these, which was another one of my Landry 100 experiment. But in that particular case, I took profits at 100%, took off half at 100% to pay for the position, so to speak. So whatever little left over is still, I guess, the profits that are left over, but not much. But it happens. I'm not worried about demonetizing. Shit happens. Here's the breakdown. I started doing this again, and it's kind of a really fascinating exercise. A couple things, of course. You pick up very minor themes that could become bigger themes, like there's one small scale nuclear company in here. I don't see it anywhere, but it's somewhere in here. If you look at it hard enough, somewhere in here is small scale nuclear. So maybe some sort of a niche, however you want to say it, area, or potentially growing area that might emerge. And obvious things will come out, like right now, gold and industrial metals and minerals, silver and uranium, and a bunch of other metals like platinum and palladium are all doing well. So the rare earths, the golds, the silvers, for the most part, doing pretty good. So as you would expect, 11% is in gold. That's a pretty big number. And then industrial metals and minerals are at 9%. Now the golds are actually coming down a little bit, so that might be a harbinger of things to come, although there are a few that I added in recently. So there is a little rotation happening there. So we'll see how that shakes out. But for now, I'm still overall bullish on the golds and the industrial metals and minerals. Now here's something that, and these hidden themes sort of come out. So that's why I'm really thinking that this experiment is a good thing to do, and I'm glad I'm doing it. Biotech, I have 11% of this portfolio, so to speak, is in biotech. Now, when we look at biotech in a little while, especially like the IBB, you'll see there's a lot of overhead supply, even though it's been kind of strong lately. But this tells me that there's a possible bull market within biotech. Remember, all of these are at all-time highs, or I should rewind that, 50-week highs at least, okay, for this list. So that's a pretty big hunk. One of the biggest pieces of the pie out there is biotechnology. So that could point out potential developing opportunities within the sector, even though the overall sector isn't there just yet. So here's the breakdowns. Again, look at biotechnology, one of the biggest areas next to gold right now. And this number seems to be growing, and the gold is starting to shrink a little bit for the most part, I think. But there's various other things in here. Crypto is growing. We have 3 crypto stocks, so that's kind of interesting. And there's a few oil and gas stocks, but for the most part, not a whole lot, because oil and gas hasn't been doing spectacular as of late. We'll take a look at that in just one second. Now, again, a lot of things that I say each week. Momentum does end badly. In a bear market, it'll do okay. We had like grocery stores and drugs and stuff like that. But they eventually got pulled out because even in the bear market, there's not always a bull market somewhere, as certain people would preach. Sometimes everything just goes down with the market. And often everything goes down. There's no place to run, no place to hide. But for a while, the momentum was there. And then, rewinding to that prior stock, and I forget which stock it was, but it went into the list right in the middle of what looked like the beginnings of a bear market. And just blindly following this momentum list, there's a stock that's up 300%, even though the overall market did poorly. Now, ideally, in your personal trading, you want the markets, the sector, and stocks within the sector, and I'm going to beat that dead horse in a few minutes, to be trending and ideally set up. So the more you have behind you, the more backstop, so to speak, the better off you are. As I say each week, cash is not trash. It's treated as an asset class. So when things start getting iffy, if I can't find new stocks to go in, I'm not going to work too hard to find something to put in there just to put it in. I'll just leave the slot as cash.